Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 3. This is Section B. This is an application topic. Determine the sources of sufficient appropriate evidence, and that would be things like obtained from management specialists, obtained from external sources, and developed by the audit team from internal or external sources. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to superfastcpa.com and sign up for our free 1-hour webinar training. Again, it's free, it's only 1 hour long, and we will teach you the key ingredients to passing the CPA exam. So make sure you go check that out. Also, after you watch that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. SuperfastCPA Pro members get access to the full 10-question versions of these 5-question YouTube videos. So in today's video, we're only going to be going over 5 questions, but SuperfastCPA Pro members will get access to the full 10-question version of the video in the member forum. So if you like this and you like our other videos, make sure you check out becoming a SuperfastCPA Pro member. Now with all that, let's dive straight into the questions. All right, here we are at question 1. Let's just dive straight in. Which of the following best describes the type of audit evidence an auditor should seek during an audit engagement? So let's go through the options. Option A, evidence that is conclusive and eliminates all possible doubt about the financial statements. Option B, evidence that is persuasive and reliable, providing a reasonable basis for the auditor's opinion. Option C, evidence that supports management's assertions and is primarily obtained from internal sources. Or option D, evidence that confirms the audit procedures were followed according to the audit plan. Okay, so out of all these different options, which one of them sounds like something that would best describe the type of audit evidence that an auditor wants to get? Now, if you think about this, probably 1 or 2 of them are going to stick out, so go ahead and pause the video if you want to. But if not, that's okay. We're going to look at the explanation together to kind of start learning about this. All right, here we are. The answer is B, evidence that is persuasive and reliable, providing a reasonable basis for the auditor's opinion. So that's the kind of evidence that we want to be looking for. So let's go into the explanation. Auditors are required to obtain sufficient appropriate audit evidence to form a basis for their opinion. This evidence must be persuasive rather than conclusive because audits are performed on a test basis, not by examining every transaction. So to be able to be conclusive, to be like 100% accurate, you would have to examine every single transaction, which you can't really do in an audit. So again, you need to be looking for evidence that's persuasive, not conclusive. Evidence should be also reliable, meaning it is dependable and trustworthy, often more so when obtained from independent or external sources. And we kind of talked about that in some previous videos, but we weren't talking about sufficient appropriate evidence at the time. Together, persuasive and reliable evidence forms a reasonable basis for the auditor to express an opinion on the financial statements as a whole. So we want to be focusing on evidence that's persuasive and reliable. Now that we have that little bit of a basic understanding, let's go to the next question. All right, here we are at question 2. Which of the following types of audit evidence would generally be considered the most persuasive and reliable? So this was slightly mentioned in the first question, but let's talk about this a little bit more. Option A, a confirmation received directly from a bank verifying the client's year-end cash balance. Option B, a schedule of depreciation prepared by the client's internal accounting department. Option C, verbal representations from management regarding the collectibility of receivables. Or option D, an internal memo explaining the rationale for an accounting policy change. Okay, so which one of these is going to be the most persuasive and reliable? Again, based on maybe your current knowledge or just what we've already learned in other videos or in this video already, you might already have an idea. Pause the video if you want to and think about this. And when you're ready, come back. We'll look at the answer together. Okay, here we are. The answer is A, a confirmation received directly from a bank verifying the client's year-end cash balance. So that would be the most persuasive and reliable in this circumstance. Audit evidence is more persuasive and reliable when it is obtained from independent external sources. A bank confirmation received directly by the auditor is strong evidence because it's both external and directly obtained by the auditor. In contrast, evidence generated internally, like schedules or memos, or based on verbal representations, is less reliable due to the potential for bias or error. Auditors should prioritize external, original, and directly obtained evidence when forming their audit opinion. So this is some of the best evidence that you can get is external, independent, directly given to the auditor. That's what we typically want to focus on if we can get it. You can, of course, still use internal evidence or even oral evidence or things like that, but the best evidence is typically going to come from external, independent, and it's going to be given directly to the auditor. Now let's go to the next question. All right, here we are at question 3. And something I always like to point out when it's an option is to read the last part of the question first, the last sentence, because very frequently that will give you context for what the question is about when it comes to test day. And this is a very good habit when it comes to, again, test day, because you have no idea what you're going to be seeing in the questions. So reading that last sentence first gives you that context, and you can more quickly move through the questions because you kind of already have an idea of what you're looking for in each question. So let's do it with this one. Which of the following best explains why the bank confirmation provides stronger audit evidence than the bank statement received by the client? So let's go up to the top. During an audit of Tall Pine Construction Co., the auditor is verifying the company's cash balance as of year end. The client provides a copy of a bank statement that was mailed to the company's accounting department. Separately, the auditor also obtains a bank confirmation directly from the bank's online portal. So again, which of the following best explains why the bank confirmation provides stronger audit evidence than the bank statement received by the client? Let's go through the options. Option A, the bank confirmation includes interest income details, which are not shown on the bank statement. Option B, the bank confirmation was received directly by the auditor, reducing the risk of alteration or omission. Option C, the bank statement was not reviewed by the CFO before being given to the auditor. Or option D, the bank confirmation contains more supporting documentation than the bank statement. Okay, so again, which one of these is going to be the reason why the bank confirmation is stronger evidence than the bank statement? Pause the video, think about this, think about what we've learned so far, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B, the bank confirmation was received directly by the auditor, reducing the risk of alteration or omission. So that's why it would be stronger evidence. Let's walk through this short explanation. While external evidence is generally more reliable than internal evidence, it is most persuasive when obtained directly by the auditor from the external party. If external evidence passes through the client, such as a bank statement mailed to the company, there is a risk it could be altered, selectively provided, or incomplete. A bank confirmation that goes directly to the auditor eliminates that risk and provides stronger, more reliable evidence. So we see here that, of course, we were talking about how external evidence is going to be the better evidence typically, but there is even a difference between getting external evidence straight from the independent source or from the client themselves. So you don't want to get confused and think that, oh, it's external evidence, therefore it's just going to be the absolute best. There is even better external evidence when it's given directly to the auditor. Because if you were given external evidence, it's from the third party, but it's coming from the client, like the client received it from the third party, and then the client's giving it to you, that's not as reliable as the auditor getting the information from the third party directly themselves. So just kind of wanted to point that out with external evidence. Now let's go to the next question. All right, here we are at question 4. Which of the following types of audit evidence is generally considered the least reliable? Okay, let's walk through the options. Option A, a representation from management stating that obsolete inventory was written off at year end. Option B, a vendor invoice obtained from the client's files supporting a large purchase. Option C, a delivery observed by the auditor during a physical inventory count. Or option D, a bank confirmation received directly by the auditor from the financial institution. So again, which one of them is going to be considered the least reliable out of these different options? Based on what we've learned so far, I think you could probably figure this out. Pause the video if you need to and come back when you're ready. All right, here we are at the answer. A, a representation from management stating that obsolete inventory was written off at year end. Okay, so let's walk through the explanation. Audit evidence varies in reliability. We've seen that throughout this video. The least reliable form is oral evidence from management, especially when it is uncorroborated by other sources. Documentary evidence, and especially when obtained from external sources, is more reliable. And so you can see there, if you get just oral confirmation about something, that is not going to be as reliable as getting actual documentation showing something. Evidence obtained through the auditor's direct observation or inspection is also considered highly reliable. So if an auditor observes something directly, they're doing a walkthrough or something like that, that is going to give better evidence than oral evidence. While management representations may be necessary in some areas, they are never sufficient on their own if more reliable evidence is available. So just to reiterate, in this question, we learned that oral evidence is almost always the least reliable evidence when it comes to obtaining sufficient appropriate evidence. So if it's possible, you want to get, again, from external sources or even internally, but you don't want to get it as oral evidence. You want to try to get it as documentation. All right, let's go to the next question. All right, here we are at question 5. And again, let's read the last part of this question first. Which of the following best describes how the company's internal control environment affects the reliability of this audit evidence? Let's go up to the top. During an audit of Fern Hill Manufacturing, the auditor is evaluating evidence related to the company's revenue recognition. Fern Hill uses internally generated sales reports to track daily revenue, which the auditor plans to use as part of the audit evidence. So again, which of the following best describes how the company's internal control environment is going to affect the reliability of the audit evidence? Let's go through the options. Option A, strong internal controls reduce the need for the auditor to evaluate the reliability of internally generated evidence. Option B, internally generated evidence is always less reliable than external evidence, regardless of the internal control environment. Option C, effective internal controls enhance the reliability of internally generated evidence by reducing the risk of error or manipulation. And option D, the reliability of internally generated evidence is unaffected by internal controls since it is not obtained from an independent source. Okay, so based on everything we've learned so far, and if you watched any of the previous videos, we talked a little bit about internal controls. Think about this, pause the video, and come back when you're ready, and we'll look at it together. All right, here we are. The answer is C. Effective internal controls enhance the reliability of internally generated evidence by reducing the risk of error or manipulation. Okay, so again, if you thought about this probably makes sense. Let's walk through the explanation. When evidence is generated internally, such as sales reports, inventory logs, or reconciliations, its reliability depends heavily on the strength of the entity's internal control environment. If internal controls are strong, the risk that the data has been altered or omitted or produced incorrectly is lower, which makes the evidence more reliable. However, if controls are weak, even detailed internal reports may be insufficient or require corroboration from external sources. Good internal controls don't make internal evidence as persuasive as external evidence, but they do make it more dependable. So when it comes to internally generated evidence, we want to make sure that they have a strong internal control environment because that will make that evidence a bit more reliable, a bit better, and more likely to be used as actual evidence. Whereas if they have a weak internal control environment, you're probably not going to really want to rely on that evidence or even use that evidence because, again, it's not going to be very reliable. So even though internal evidence still probably won't be quite as good as external evidence, you want to make sure that it has good internal controls so that you can still rely on that internal evidence as much as possible. So with that, we've learned a lot in just 5 questions about what you need to know about the sources of sufficient appropriate audit evidence. Before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or 3 or 4 questions trying to teach you about what is the most persuasive type of audit evidence, or what is the least reliable, or whatever the case is. Again, you've noticed these throughout the questions that you've been doing in your review course. So you take a moment and you write these out in your own words as the pillar topics for what you learned that day from the questions. And as you're doing this each day, you're building your own personal repository of the most important things you need to know for the exam, again, in your own words, based on the questions that you did. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive straight in. First off, evidence must be persuasive and reliable. Auditors are required to obtain evidence that is persuasive, not conclusive, and reliable enough to support their opinion. Reasonable assurance is the goal, not absolute certainty. And we've talked about that in multiple other videos. Again, you are almost never going to provide absolute assurance about something in an audit. You want to provide reasonable assurance, so you want to have evidence that's, reasonably persuasive, that is reliable, that makes sense, but you can't provide conclusive or have conclusive evidence. Now let's talk about the next one. External direct evidence is the strongest. Evidence obtained directly by the auditor from an independent external source is the most reliable. This reduces the risk of manipulation or omission by the client. Let's talk about the next one. Internal evidence is weaker. Internally generated evidence, like reports or memos, is less reliable because it can be influenced by the client. It becomes even weaker if unsupported by external evidence or strong controls. So, we're kind of seeing the differences here, kind of going down the totem pole. Now let's talk about the auditor's own observations, which are helpful but limited. Evidence that the auditor gathers through personal observation or inspection is useful. That could be really good evidence, and generally more reliable than internal documents. However, it is still not as persuasive as direct external confirmations. I want to kind of expound on that because we haven't talked about that a lot. I was going to talk about it a little bit more in the full member version of the video, but just to make sure it's a little bit more clear here, the reason that it's not quite as persuasive as direct external confirmations typically is because even though the auditor is observing it themselves, it's direct personal evidence, direct personal knowledge, whatever you want to call it, they are still almost always obtaining it from internal sources if, they're observing the documentation or the processes of the client. So again, if they're obtaining it from internal sources, even if it's really useful, even if it's, again, direct observation, because it's based off of the internal sources, usually it's still not going to be as persuasive as direct external confirmations. So I just kind of wanted to expound on that for a second. Now let's talk about the last one. Internal controls influence reliability. When internal controls are strong, internally generated evidence is more trustworthy. Weak controls increase the risk of error or bias, requiring the auditor to seek additional or stronger evidence. So those were the pillar topics. Those are kind of the main ideas that we were trying to get across in these first 5 questions. Now with that, that is the end of this YouTube version of the video. Remember, we're only going over 5 questions in today's video, but if you become a SuperFast CPA Pro member, you will get access to the full 10-question versions of the videos, so you can get a little bit more help and a little bit more understanding with the topics that you need help with. So make sure you check out becoming a SuperFast CPA Pro member, and the easiest way to learn about that is actually by going to SuperfastCPA.com and signing up for our free 1-hour webinar training. Again, we will teach you in that 1 hour the key ingredients to passing the CPA exam, and after you watch that, you're going to want to learn more, and you're going to have a better path to learning about becoming a SuperFast CPA Pro member. So check out the webinar, check out becoming a Pro member, Now, before you go, if you liked the video, make sure to like it and leave a comment. I hope this video was helpful, and I will see you in the next video.